Good evening. This is the post-market recap by AGI Era. Today is Monday, March 2nd, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a market grappling with geopolitical tensions and shifting macro fundamentals. The S&P 500 finished the day up 0.4%, settling at 6881.62. Technically, the index managed to hold above the psychological 6,800 level, but the advance was marginal, indicating a lack of strong conviction. The Nasdaq 100 edged higher, closing 0.13% higher at 12,492,602. The Dow Jones Industrial Average finished lower by 73.14 points, a modest decline of 0.15%. Crucially, trading volume today was elevated, with the S&P 500 seeing over 2.28 billion shares traded. This suggests that today's moves, particularly the underlying rotations, are backed by institutional activity rather than just retail speculation, implying a higher degree of conviction in the market's current direction. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 19.86. Despite the day's underlying anxieties, the VIX remains somewhat subdued, though up from its previous close of 18.63, suggesting that while there's caution, we're not yet seeing widespread panic. This indicates a controlled rotation rather than a capitulatory sell-off. We are seeing a clear divergence in sector performance. Money flowed noticeably into technology XLK, which gained 0.53%, while utilities XLU lagged significantly, falling 0.75%. This rotation indicates that Wall Street is positioning for continued growth in the tech sector, even amidst macro headwinds, while defensive plays like utilities are being shed, perhaps due to rising bond yields. The spread between these two sectors today tells us that investors are favoring growth over safety, despite the broader geopolitical concerns. The macro engine room. The primary driver of today's moves can be traced back to the bond market and escalating geopolitical tensions. The 10-year Treasury yield settled at 4.038%, rising 9.6 basis points on the day. This move is significant because it reflects a flight to safety in the dollar and concerns about inflation stemming from rising energy prices. Higher yields directly create a headwind for growth stocks, increasing borrowing costs and making future earnings less attractive when discounted at a higher rate. It also puts renewed pressure on mortgage-sensitive sectors and companies with high debt loads. Meanwhile, the U.S. dollar index is stronger, closing at 98.48, a notable increase of 0.94%. This surge in the dollar is a direct response to the escalating Middle East conflict, as investors seek refuge in the world's primary reserve currency. Crude oil is trading around $71.51 per barrel, responding to the same geopolitical tensions with a significant jump of $4.49, or over 6.7% on the day. The narrative news confirms that the Middle East conflict is driving both the dollar's strength and oil's ascent. The AI and Tech Monitor, turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day up 2.99% at 182 days, continuing its impressive run. Microsoft closed up 1.40%, while Apple saw a modest gain of 0.16%. However, Alphabet Google closed down 1.76% at 306.26. This weakness in Google is notable because it appears to be a confluence of factors. Broader market worries stemming from the Middle East conflict, which tends to hit growth stocks, and concerns over the company's forecast for full-year 2026 capital expenditures, which are expected to be as high as $185 billion, far exceeding consensus estimates. This heavy investment, while potentially beneficial long-term for AI infrastructure, is weighing on short-term sentiment. Other Mag 7 movers included Meta, which gained 0.83%, while Amazon slipped 0.81%, and Tesla saw a slight gain of 0.12%. After hours and look ahead. Looking at the after hours tape right now, shares of ConocoPhillips are moving significantly, up over 6.5% after hours, likely continuing to react positively to the surge in crude oil prices. Occidental, OXY, is also seeing strong after hours gains, up over 6.3%. As we pivot to tomorrow, the calendar brings us no major economic data releases. meaning market participants will likely continue to digest today's geopolitical developments and their implications for inflation and interest rates. Investors should specifically watch the 4.0% level on the 10-year Treasury yield as a key indicator of continued macro pressure and monitor any further escalation in the Middle East, which could continue to fuel energy prices and dollar strength. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.